Day trader, and welcome to the first webinar for May 2017. Today I want to go through what the Aussie is doing exactly, how trades are doing, and possibly what other trades are lining up. Okay, now the Aussie is being very sluggish at the moment. It's broken out of its uptrend. It's showing that it wants to go up, but it's just being a little bit sluggish, and it's not getting it doesn't have that catalyst to push it up just as yet. So we can take a look more carefully by looking at where the uptrend started. And it started in December 2016, where the market started going up and making higher lows. So you can see it made the first higher low here on the 1st of March 2017, and now it is accelerating with this trend, as you can see. Okay, and it's accelerating again. Now I'm just waiting for it to bounce off this level so it can finally get some traction to go a bit up. Okay, but it will only go up once it breaks through this uptrend. You see that? So this is almost like a rising wedge, which normally breaks to the downside, but in this case a rising wedge would only break to the downside if the general trend was down. So in this case, the general trend is it's not really up, but it's up but sideways up. So once it breaks out, this will be the traction that needs to go further. If it breaks down, we could test these levels over here before it turns up again. So we're not in a bear trend at the moment. We are actually in a bull trend, even though it looks a little bit sideways. Okay, and this is the reason why our trades are acting a little bit sluggish. They are in profits at the moment. I'm sure they are in profits with you as well. But we're just waiting for that catalyst. So let's go through the watch list. So normally when the stock market goes up, the resources tend to go down. Okay, and we can see it clearly over here from October 2016 how Anglo Gold has just been on a one-way trajectory down. Now, I do not believe in ever trading Anglo Gold purely because of it's actually fundamental reasons that I don't trade it, and that is I cannot see how gold is going to go up when the reserves are becoming more expensive to mine, and they have to mine lower, deeper down in the veins. So it just doesn't make sense to me. You know, sometimes you got to apply logic to the charts, just sometimes, not always. So Aspen, also another one, been on a continuous downtrend, and currently it looks like it's forming some kind of inverse head and shoulders. The problem why it would be a medium probability trade if we went long is purely because of the sideways / downtrend movement, which is what we're trying to avoid. African Rainbow, it's actually made a consistent downtrend from the 26th of January 2017, continued to go down, and it's broken below this inverse cup and handle, which means that we could have a downtrend target of around 30 rand, but we'll have to see. I don't want to trade it just as yet. I don't like going short when the market is long, if that makes sense in a way. So then we've got Barlow World, which made this beautiful cup and handle, and it broke back down. I didn't get into this trade. I should have. There is no reason why I didn't. It probably just slipped my mind. Okay, no other excuses. Okay, nothing going on there. Billiton, another resource stock which is not showing upside just as yet. It's almost created like a mean, and if you take the average mean, which is around 215.31, you can picture this as a band. All right, so similar to how Bollinger Bands work, this is almost like an elastic where the price goes to a certain level at 190 and then goes back up to 220 or so, then it goes up to 253 and pulls back down. So this is a beautiful movement for what they call mean reversion traders. Not exactly myself, because I haven't done the stats and it doesn't really suit my personality. But for mean reversion, I'm sure Billiton has given them a field day. Richmond, I do not like these gaps. This is the reason why I'm avoiding Richmond at the moment. You don't want gaps. You could have gone long at this level and then you woke up below the actual stop loss. So even if it breaks below the stop loss, you need to get out of your trade immediately. There is no negotiation. Okay, you cannot wait for it to go up to your stop loss. If it broke below your stop loss, this is a warning signal that the market is showing huge downside potential to come. So get out of your trade, take the loss, whatever it is. And this is something that you have to learn with trading, where you don't have ifs and whats and, you know, I should have or whatever could have. Those are cronies that you must avoid with trading by all means. Okay. Let's look at a more lighter note. We have CLS, the clicks group. We got into the trade. It came down. I thought it was going to hit the stop loss, but it looks like it's gone back up, and now it is at 137.52, where our entry was 136.59. So no fireworks just yet, no champagne glasses, waiting for this level at 139.20 to break, and then we'll have a high probability of it going to our take profit. But until then, we need to do nothing, just leave it alone. Discovery as well, it's created an uptrend, but it's almost been a rounding uptrend, and these are uptrends you got to watch out for. They are not sustainable. Normal uptrends go up 45 degrees. These rounding uptrends mean that it's sideways / going up / I'm not sure if I should continue going up, and so I'll come back down. So I avoid it by all means. Okay. I seem a little bit harsh in this video, but that is what trading is about. You need thick skin. It's not for everybody. Make sure you know that, okay? Even though we had a fantastic quarter last quarter, and this quarter hasn't started off on a good note, in fact, it's ending next month, we can still catch up, but we need to take the risks and precautions in mind, okay? Kumba, another stock that is just showing nothing at the moment. It broke out of this, which you can call an M formation, and the target that it looks like is down to 122.45. All right, I'm not a big advocate for shorting. I've got issues, all right, and I've learned my lessons through shorting. But if you're keen to short, this could be a level. I'm not telling you to get in, but it could be a level to short. Or maybe we've missed the boat. But anyway, here is the next target. Mondi. Mondi I'm enjoying lately. It's been showing some strong trends. It's showing some nice patterns. Here is a W formation. Here is a sideways pattern. So it looks like it's going to be strongly on my watch list. I was a little bit concerned with this candle. You don't want to be in a stock with high volatility, but I'm watching it very carefully. MRP race. All right. Mr. Price it's been constantly up on an uptrend. It broke below, and now it is in a sideways movement. All right, so it means you do nothing. Massmart as well, you can see it had a very strong uptrend all the way from the 15th of November 2016 to the end of March 2017, and now it is on its downtrend. MTN, another stock that I really do not enjoy trading. I've never really gotten it right. I just don't know. It's the personality of the stock that just does not make sense to me. So I avoid it at the moment. I always watch it just in case it decides to show a nice pattern forming, and also I need it to be on an uptrend. But as you can see, MTN has not had a good ride all the way from 2014, where it was at 263 Rand, now it's 120. Not good, MTN. All right. Then we've got Nedbank, also on a downtrend, broken from its uptrend since 2016 in May. Netcare, I've seen it do better. All right, we've seen it go all the way through to over 40 Rand, and now it's currently at 26. So it also seems to be having some kind of band that when it approaches 30 Rand, it's almost being, as it's going up, it's being pulled down, which takes it back to the equilibrium. And now it's on its way down, and then it could be pulled up. So it looks like 30 Rand is the nice mean reversion for Netcare. PIK, that is Pick and Pay. Nothing going on there. Raynet, again, no fireworks, no celebrations. We are in the profits at the moment with Raynet. It looks okay. I'm not 100% happy yet. I need it to break above 32.75, which goes similar to the clicks group, where it needs to break above that level. Once it breaks up, then it shows a high probability that it'll be going to our take profit. But until then, we'll just hold and wait. You do not celebrate until you close a trade. That's the most important thing. An open position is an open position. It's not closed, so there's no reason to celebrate. Rem growth, so nothing is lined up at the moment, as I can see. Even though we need to send out trades, I don't want to send out the wrong trades. So nothing is lining up over here. Sanlam, anything? Potential cup and handle. If it breaks above 71.93, we could have a nice long. So I'm writing that down. We got 71.93, excuse me. And this is due to a cup and handle. And it's a medium probability trade because it's not a very rounding cup and handle. It's more V-shape. But the general trend is up. There's higher lows, and it just logically makes sense that it should be going up. So I'm going to add this level over here. You can see how I also use Rand Swiss Pro Trade. I love this platform. It's just so nice. You can change the colors. You can change the thickness. It's really beautiful. Okay. Nothing going on there. Sideways. SPAR, downtrend. Tiger Brand, sideways. TFG, downtrend. Telcom, sideways. Truworths, downtrend. Vodacom, that showed some nice upside. I was waiting for this stock to hit this level where it would form this W formation. But unfortunately no formation formed, and therefore that's the reason why we didn't get in. But if it did touch, we would definitely have been in Vodacom. But we need to keep to our strategies. Right, and then Woolworths, sideways trend, nothing going on there. Right, so now normally when there's no pattern lining up or there's not many stocks that are lining up, what I do is I look at the trends and I want to follow the trends to get in. So it's the other strategy that I use, and I'm sure you've picked up if you've been with Red Hot Storm Trader for a while, and that is when the stock market, one of the stock is going on a continuous trend up, I like to get in so that we can grab the rest of the upside. We don't look for downtrends to go up. We look for uptrends to go up. Okay, so that's what I'm doing quickly. If you do see a continuous uptrend that's a potential trade, feel free to send me a message on the Investors Club today. But I do not see anything. It looks like Raynet actually goes with the trend system. You can see there's higher lows. It's going up. Even though we are in the trade, it looks like there's two systems that lined up in that case. Standard Bank, we have a cup and handle, okay, but I say that with a little bit of hesitance, and I think you know why. And that's because of this gap. I do not like these gaps in the market. It means that there could be more gaps following. So this is dangerous. Even though there's a cup and handle and it can show some upside, you want to avoid the gaps. ShopRite, one of my few favorites that I've been looking at lately. I've been enjoying the movements. I don't like this gap, but I have been enjoying the general movements of ShopRite lately. Sanlam looks like the best trade that we could possibly go in. We could even get in a little bit earlier, but you obviously have to keep your phone close to you. Even that was a gap, but it wasn't that dramatic. And it looks like it's now come to equilibrium. Also, we look for gaps that, for example, they haven't closed. So, for example, if this gap opened, it only took until the 22nd of March to close the gap, meaning that the price was between the high and the low of these candles. It closed the gap. Okay. Vodacom, I would like it to come and test around 160, and then we could possibly go long purely based on this uptrend. They've been having a good time at the moment. Nope, that's it. So I'll be watching Sanlam very carefully, and I'll be sending you the trades. We've still got an entire month to make up for any of the losses, which we'll try do our best, right? We'll just follow the strategy as it is. And if second quarter isn't okay, it's all right, as long as you haven't made you've made a big dent in your financial portfolio. You're risking 2% of your portfolio. There's been times where I've been down 2 quarters in a row, and then the next quarter just makes up for it. So that's trading. That is the realities of it. I'm glad you're still on board. Things are looking okay. All right, I'm not going to say that we're having celebrations just yet like the first quarter, but both trades are in profits, and let's see. We'll hope for the best. Until then, keep your eyes peeled on new trades, and now that you've got more information on what you can look out for, and also feel free to look at other stocks and see if things are lining up on that side as well. Until then, have a fantastic weekend, and I'll chat to you soon.